Hello everyone. I'm Ai Rav, and you are listening to the 693 episode of our Here and Now podcast. This is where we unpack the latest stories shaping the insurance industry, insights that matter to professionals, families, and communities alike. So, stay with me, because we've got some fascinating updates lined up. Let's get started. Our first story, from The Pioneer, highlights India's healthcare sector, which is currently valued at $300 billion in FY25 and is projected to nearly double to $700 billion by 2030. This impressive growth reflects the sector's expanding role in the economy and its potential to drive productivity and employment. At the same time, the journey ahead calls for strengthening financing models, as out-of-pocket spending still accounts for 44% of total costs. With 60% insurance coverage already in place, there is significant scope to extend protection to the remaining population. Looking forward, the sector is expected to require over $200 billion in investments by 2035 to enhance medical infrastructure, adding doctors, nurses, and hospital beds, while addressing the rising burden of non-communicable diseases. Industry leaders see opportunities in deeper private insurance penetration, stronger public-private collaboration, and wider adoption of digital health solutions to ease financial pressures on families. As India positions itself as a global hub for affordable, world-class medical services, continued reforms in financing and infrastructure will help unlock this vision and ensure inclusive growth. Our next story, from Vikatan, emphasizes that health insurance is not only a safeguard against rising medical costs but also a smart way to save on taxes. Under Section 80D of the Income Tax Act, individuals can claim deductions on premiums paid for health insurance policies covering self, spouse, dependent children, and parents. The deduction limit is 25,000 rupees per year, which rises to 50,000 rupees for senior citizens. If both the taxpayer and their parents are senior citizens, the combined deduction can go up to 1 lakh rupees annually. Additionally, medical expenses for uninsured senior citizen parents can be claimed up to 50,000 rupees, provided payments are made through non-cash methods. Preventive health checkups are also eligible for deductions up to 5,000 rupees. These benefits apply only under the old tax regime, as the new regime has removed most deductions. By leveraging Section 80D, individuals can reduce tax liability while ensuring financial protection for their families, making health insurance a dual-benefit investment. Our third story, from Deccan Chronicle, reports that the Andhra Pradesh State Road Transport Corporation, or APSRTC, has introduced the health insurance scheme for its employees. Launched by the Vice Chairman and Managing Director of APSRTC, the scheme offers two options: Sapphire Classic and Sapphire Super Top-Up, covering employees, spouses, and up to 2 children. Benefits include hospitalization, daycare procedures, Ayush treatments, ambulance services, and modern medical procedures, with cashless access at over 18,000 hospitals nationwide. The Super Top-Up provides coverage between 10 lakh rupees and 50 lakh rupees and can be continued after retirement. Officials noted that the scheme was designed with the nature of APSRTC's work in mind, focusing on employee and family health. Enrollment is voluntary, with online registration available, and unit officers have been asked to raise awareness for participation. Finally, our last story, from Business Standard, highlights that the Insurance Regulatory and Development Authority of India, IRDAI, has directed insurers to keep their branches open on 31st March 2026, ensuring customers can complete transactions smoothly at the close of the financial year. This move is intended to prevent inconvenience for policyholders who may need to renew, purchase, or update their policies before year-end deadlines. Insurers have also been instructed to give adequate publicity to this arrangement so customers are aware of the extended availability. By mandating normal working hours on this crucial date, IRDAI reinforces a customer-centric approach, ensuring accessibility and convenience for policyholders. The directive underscores the regulator's focus on safeguarding consumer interests while supporting insurers in maintaining transparency and service continuity during a busy period. And with that, we conclude today's episode. We hope you found these in-depth updates helpful and insightful. As always, our podcast Here and Now will continue to bring you more stories from the world of insurance. Until then, take care, goodbye, and have a great week.